In a curious twist of fate, there was a breather for the falling of foreign exchange reserves as the reserves returned to a growth path with a gain of $500 million in just 1 week. Yes, making it the highest point in more than two months. According to the recent data from the Central Bank of Nigeria, the reserves, which have been unsteady in recent weeks, jumped to $33.43 billion in August to $33.93 billion on Monday, the highest since June 11. The reserves recorded its sharpest rise in January, receiving a huge inflow of $929 million, recording a 2.6% increase month on month to $36.3 billion from $35.37 billion in December, courtesy of rising crude oil prices. However, in a related development, the Naira appreciated against the dollar at both the parallel market and investors and exporters window. This has actually generated lots of reaction. And to discuss this, I have joining me from our Abuja studios. He's a professor of finance and capital market, as well as the president of the Association of Capital Market Academics of Nigeria, Professor Uche Uwaleke. Good afternoon, Professor Uwaleke. It's good to see you.
Yeah, good afternoon, Tolu. It's indeed my pleasure.
Let's start with the $500 million increase that we've seen in our reserves. How does this come to you? What is happening? We are kind of improving reserves. Of course, having good reserves is good for the economy. But what do you think is responsible for this increase at this time?
Absolutely, Tolu. That's sharing news for the economy. Because as you know, healthy reserves raises the profile of the country, enhances our credit worthiness, and also boosts the confidence of investors, both local and foreign investors, in the economy. So it's good to know that the reserves are growing. I was looking at the figures on the CBN's website, and I noticed that between 24th of August and 31st of August, okay, both gross reserves and liquid reserves grew. Gross reserves rose from about $33.4 billion to $34.01 billion. So, and that's close to $600 million accretion. So, as I said, it's sharing news, and as you know, Tolu, the bulk of what comes into our external reserves is from oil revenue, which accounts for over 90% of what comes in there. So if reserves are growing against the backdrop of decline in capital importation, that's foreign investments, the only conclusion one can come to is that is on account of favorable performance in oil revenue, which, as you know, is a function of not only the oil price, but also the oil output. If you check the CBN's website, you will also see, as of yesterday, oil price has appreciated to $73 per barrel. Only a few days ago, oil price was below $70 per barrel. And to try to figure out why, recently we saw hurricane in the U.S., which of course affected U.S. oil output, and because of the fall in output, of course you would expect that should impact oil prices. So oil prices rose in response, and as I mentioned earlier, it's not just about price, also about output. Now, if you look at the MBS GDP report for second quarter of 2021, it clearly stated that part of why the economy didn't even grow as much, as it ought to, from the oil sector angle, has to do with the decline in output. Oil output fell to about 1.6 million barrels per day in the second quarter of 2021. So what we have seen now is an improvement in oil output, again on the back of the increase in oil quota, from OPEC. So it is most likely that output is increasing, and you also have oil price increasing. So when you have this situation in which both price and output are increasing, you should expect that should impact the reserves, positively, and that is what we have seen, essentially. And as I said earlier on, it's good news for the economy, especially when you consider that we need sufficient reserves to be able to maintain exchange rate stability, sufficient reserves to give the central bank enough muscle, to continue to intervene in the forex market. So Tolu, it's one good thing, and as has been projected, it is very likely that external reserves will hit $40 billion, before the end of the year.
Wow!
If the outlook.
That would indeed be a good one, 40 billion. But Prof, you would agree with me, like you also identified that there's a little bit of decline even in export earnings, and there's a widened trade deficit. What about diaspora remittances? We see a lot of moves trying to improve what we get from that end, and many say we are not getting as much as we should. We see a lot of efforts from the likes of NITCOM, the federal government, and all of that, trying to woo more Nigerians to get some more effects into the country. What can we do along that line?
Yes, Tolu, before now we were recording I would say something impressive by way of diaspora remittances, between 24-25 billion dollars. But the decline we saw in 2020 and still in recent times, has to do more with the COVID that affected global economies, and the major source of not only capital importation but also diaspora remittances, as you know, has remained the U.S. and the U.K. So the U.K. and the U.S. are if you like, the primary sources of diaspora remittances and capital importation. That's why you have most Nigerians, to begin with. So if these economies were impacted by COVID, you would also expect that that should also affect diaspora remittances. But as you know, the central bank has put in place some measures to incentivize diaspora remittances, one of which, has to do with this Naira for dollar policy. Again, I want to expect that the policy too is being partly affected by the lingering effect of COVID-19. On global economies. Tolu, I want to also say this, that recently we had that some medical doctors wanted to go to South Korea, not South Korea now, Saudi Arabia. Were stopped. Yes, yes. But my take there is this, that as long as those doctors or any professional for that matter, was not trained on the on scholarship, maybe on government scholarship. Okay, such a professional, should be, allowed to leave the country if he or she, so desires. And even for those who get trained on government scholarship or government funding, usually you sign an agreement with them to remain in Nigeria for a period of time, before they're allowed to go. Now that has its own merits, and part of the merits is the fact that when these people leave, eventually they find themselves in Saudi Arabia or in any other part of the country. Okay, the benefit, will also come by way of diaspora remittances. These people will eventually remit, forex, into the country one way or the other. So it also has its merit, and we should also be thinking of developing our systems here, whether educational system, whether medical system, and so on, to a point where even foreigners can also come in, come in and participate. You go to South Africa, you find medical Nigerian doctors, working there, but you hardly see South Africans working in Nigeria. So that speaks to the need to also make an environment conducive to attract, these people into the country. So the point I'm making is this: diaspora remittances, can increase when Nigerians abroad, are incentivized to, bring in funds, into the country. And I think the potentials are there, given our population and a number of Nigerians, in various parts of the world.
All right, the president of the AFDB sometime last week talked about the special drawing rights. That's the IMF special drawing rights, saying that this is also something that will impact positively on Nigeria's reserves. And everyone knows that increased reserves is expected to, of course, ease pressure on the country's currency. So if this happens, and I think it's about 27 billion for the African continent, which about 3.4 or so is accrued to Nigeria, I guess so. I should be correct. But do you see the strengthening our currency eventually?
Yeah, Tolu, earlier on I talked about the outlook for the country's external position, particularly for the external reserves and even for the fate of the naira. And I said the outlook is, positive, which is why I strongly think that those currently speculating in the market now may eventually have their fingers burnt. I said it's positive. If you look at the factors, likely to shape the exchange rate in the near future, you have the fact that, for Nigeria, the OPEC quota has been increased. You have the fact that for some time, the oil price is also expected to remain strong. You also factor in the fact that any moment from now, yes, from the month of September, the government intends to also take, Eurobonds, issue Eurobonds, and that will also bring in, some forex into the country. And then the issue that you mentioned, the special drawing rights, which was approved, I think on August 2nd by the IMF board, which became effective on August 23rd. Tolu, as you know, special drawing rights, the IMF describes them as an unconditional, reserve assets, of countries. And that means unconditional in the sense that when you are allocated a special drawing right, you are at liberty to, do whatever you want to do with it. Member countries are not under compulsion to follow a particular line of action. So, the 190 member countries of IMF, for example, who are also members of the special of the SDR department, can decide to also have it in their reserves, or to even exchange the special drawing rights, for foreign currencies. Now, you asked the impact on foreign on our reserves. It's going to be positive, because these special drawing rights are backed by 5 major international currencies, namely the US dollar, the euro, the pound sterling, the Japanese yen, and the Chinese yuan. So these are the currencies in the basket of SDR. So the allocation that was done, as you rightly mentioned, Nigeria got about $3.35 billion equivalent. Remember that the special drawing right itself, has a higher value than the US dollar. For example, what was done globally was just about 456 billion SDR, which is the equivalent of about $650 billion in SDR. So our own share of $3.35 billion will certainly help to boost reserves. As I said, is something that Nigeria can also decide to exchange for foreign currencies. The SDR market is there for such exchanges to take place, which is usually facilitated by the IMF itself, most of the time standing as a counterparty. So I think it's positive for Nigeria. When I said that speculators are likely to burn their fingers, I had this at the back of my mind. If you factor SDR, if you factor the Eurobonds, if you factor the fact too that oil revenue, will continue to grow, then all this should boost our reserves, and that should put the central bank in a very strong position to intervene, in the forex markets and ensure that there is exchange rate stability. So what you find playing out now in the black market, where Naira is said to be, depreciating. As at the last time they said, Naira depreciated from, from is it 524 to 527 Naira. For me, it is temporary. It's temporary, and it's happening because the black market has been drained, if you like, of the supply of funds that used to flow from the BDCs. So again, that vindicates the central bank. That goes to show that much of the supply of forex in the BDCs, they were all coming from the central bank. So a lot of forex diversion was going on, at the time, which is why I lent my support to that measure, suspending sale of forex to BDCs. And what has happened now? The central bank has also realized that forex fraud has persisted. This time on the part of customers of banks who get this forex, and by using fake travel documents, or even when they get the personal travel allowance or business travel allowance, they don't eventually travel, so they cancel their flight tickets. Okay, so what the central bank has done now is to say, banks publish BVN and names of those who are involved in that. So the point I'm making is that it is easier for the central bank to monitor the banks that are fewer in number, than for the central bank to monitor the over 5,000 BDCs. So it is still well, and that this is happening, at the level of deposit money banks, is which I said earlier, easier to monitor than the BDCs.
Okay, as we wrap up, do you think that massive importation of goods and services, which has also always been our way that's our way, that's what we do, even PMS, we have to import, and we spend a lot of dollars doing this. Do you think this could also have any impact on our reserves going forward? Absolutely.
That's one thing that is burrowing, a very huge hole in the external reserves, and I'm happy that the Petroleum Industry Act is eventually in place now, because one of the things it will do is to at least open up the sector for investments. If we have more refineries in the downstream sector, that should have the effect of reducing at least what the imports that we are making. Okay, and that will also reduce the pressure in the forex market. So I think it's having an impact, and if that is taken care of, it will also help conserve reserves. That's also part of why, if you recall, the central bank even came up with the policy of denying some items access to forex, and the 42 items. Yeah, that is all geared towards managing the demand for forex, which is one aspect of it. The other aspect, which is supply, we know is largely exogenous in the sense that the central bank has little or no control over the supply. But demand, yes, the central bank can still use some measures to restrict the demand on forex until we get to a point where we could say it's a comfort zone. We can now truly float the naira, as people, including the IMF, it has been canvassing.
Well, it's a good way to live. It's always interesting talking to the professor of finance and capital market, who's also the president of the Association of Capital Market Academics of Nigeria, Professor Uche Uwaleke. Thank you very much for your time. I appreciate this.
Thanks for inviting me.